Hi, this is Graham Bibby on the 2nd of December 2015. It seems like I keep repeating myself, but we've just been through another volatile week, which has seen me move clients back to cash. Because at the end of the day, we're all about limiting the downside. Doesn't mean we don't have the downside. And the market action of the last month or so and volatility has meant we've moved in and out a few times, which always results in short-term negativity. But let me just take you through the world so you can see the overall picture. And I'm starting off with the Sydney's All Ordinaries Index, just to show you the extent of what's been happening around the world. This is the market here where this arrow is and this circle is in April, when the market was around 6,000. And 2 days ago it dropped below 5,000, which is a 1,000-point move, which is about 15–16%. And then we've had this bounce. Now, in technical terms, when you get a bottom like this, which was a bit of a climatic sell-off in August, often it can be the bottom, and if we get a reversal, which we seem to have got, because if we just zoom in here, it was from that low, it went up and ended towards that line on the right there. It ended towards the high of the day, the very highest of the day, and started to rise. But also what can happen if that is not the immediate bottom, we try to get some gains, we go sideways and we retest, which is what we've been doing 3 days ago, retest that bottom. And if it holds and we break up from here, that will mean that this becomes a long-term support level. Now, I just want to show you correlation with metals, because this thing had a climatic sell-off the same period. And then here, it really looked like we were into a new uptrend. This bottom here is higher than this one, and this top here is higher than this one. This was signaling the attempt at a new uptrend, but again, it sold off with everything else. Emerging markets I'm really interested in because they've been hammered, and at some stage in the future are going to be very good profits made from that area. Now, this is the Direxion Emerging Markets Fund. Here it was 31, and in August it went to below 12, which is about a 60% movement as far as I can see. We started to look like, again, a new uptrend with a higher high here. This low was higher, but couldn't be sustained. We even broke through this downtrend, but we've gone back to test again. So what we need to do is see if the test holds. In Hong Kong, similar pattern. This is the ETF here. It was 25. It went down below 18. That's 7 points. It's about it's almost a 20%, 18% downward move in a few months. It's seriously underwater since the beginning of the year. But again, this looks like we could be trying to bottom out. Now let's get over to the US, where we're looking at our undervalued stocks. And here you can see the extent of the sell-off in August. Bang. Then we got a higher bottom here and here. And then we broke out of this following the stocks that I bought. So this looked like, oh, this is the climatic sell-off. But as I mentioned earlier, quite often the market can come back to test support around this region. Is a really long-term support there, and if it is, then that might be the start of a new bull trend. Just want to show you in a weekly chart. It's been finding difficulty all year here, and then this really broke that trend, and we've risen to this moving average and we've turned over. That's why I quickly moved to cash, even though, I have to move to cash on a down day. So if you do that, you're sort of locking in those losses. But as I told you before, it's all about cutting losses and exiting and then re-entering when the opportunities arise. Okay, that's back on the daily chart. This is the, as they say on Bloomberg's, the tech-heavy Nasdaq, and that is the severity of the sell-off. And then it broke through here, seemingly confirming my decision to move back into undervalued superior earning stocks, which had led the way, but only to find another significant sell-off over the last 2 weeks of September. Again, this bottom here is higher than this one. You can't even really notice this blip up. So right now, nothing to go for there. The Dow Jones 30, similar pattern. Here we were, this was the end of 2014, where this arrow is now, 177.50, and we're down 10%, even at today's level. We were down more than that. We were down about 14% at the bottom in August. And now we're breaking out. We've tested back. We've got to see if there's support here. And finally, the Russell 2000, which doesn't really concern us because we're not in virtually any stocks there. But the market was here, 1225. Recently, it got down to 1,080. So that's 140%. It's about a 14% decline. And you can see with this one, it broke out the same, which I was getting all excited because I thought, okay, that is the climatic sell-off. We're in some great stocks. They all remain great stocks, but they can't go against the trend. And now the trend is with us. But as you can see, that's what's happened over the last week and a bit. And actually, we're down around new lows. We're lower than this low. So maybe the Russell 2000 is leading us. That's a bit of a concern. And if we look at this one, you can see here before in 2015, we were moving to new high ground. But now we've got all these lows coming in. And we're breaking below this low and this possible long-term support. So it looks like the market may have turned over. So right now, we're back in cash and watching very closely. I'm still analyzing for more undervalued superior earnings. It is disappointing for you, and it's very disappointing for me because I'm working on results. But at some stage, as must happen, these companies still coming up with superior earnings, and they have low PE ratios. Eventually, at some stage, they'll turn, and any gains that have been missed now will be made up for in the future. So it's Graham Bibby on the 2nd of October 2015, wishing you to enjoy your weekend, knowing that the Insider Club undervalued superior earnings stock is in cash. My special situations service is largely in cash. I think we've got 4 positions at the moment because that's supposedly of a longer term nature. However, if supports are broken, even with that, we move to cash. It's more volatile because we're looking for higher gains. So we're just on the 8 minutes mark. Graham Bibby saying bye bye for now, and I'll speak to you next week.